Hello and welcome to this video. My name is Milind Date and I'm an expert tutor for the AFM examination. In my earlier video on the topic of business valuation, I had unpacked various approaches and methods of valuing companies in the events of mergers and acquisition. So in sequel to that video, I would now deal with specific concerns that students face when tackling questions on section C of the AFM syllabus. This video specifically addresses how to estimate, based of course on the information given, the value of a combined entity, additional value created by the transaction of merger or acquisition, potential gains for the shareholders of bidding company and target company. Of course, the focus of this video is on computational skills. Highly technical in nature, this is a frequently examined syllabus area. And therefore, it requires expert knowledge of the subject coupled with analytical skills. Students will need to handle varied type of voluminous financial information given and also need to make assumptions wherever required. Of course, this video will not touch upon strategic or qualitative aspects of the merger and acquisition transaction. So let me tell you specifically what am I going to cover in this video. We'll see how the students should tackle the issues on valuation that arise out of M&A transaction. And I will take the help from the past exam questions to demonstrate and illustrate my points. And we'll also have a look at various learnings from the comments that examining team makes after every exam diet. But of course, before you start practicing questions on this particular topic, please revise the basics of valuation approaches. And for that, I would suggest that you go through the chapter number 7 and 8 from the AFM Study Hub and revise your knowledge and learnings on various approaches to valuation, like asset-based valuation, market-based valuation, dividend valuation methods, free cash flow techniques, and the impact of synergy on valuation as such. Basic understanding of these approaches is definitely going to lay down foundation for tackling complex problems on this topic. It will certainly help you to understand and then use relevant financial information regarding the bidding company, the target company, and also the market. The valuation method that you use will certainly depend upon the information that is available to you in the scenario given. Let's now look at how is this topic tested. And then I will illustrate with the help of past exam questions. So the topic can be tested either as a part of a 50-marker question in section A of the exam, or also 25 marks question in section B. Computations, calculations are of course an integral part of this particular requirement. And then the requirement will also require you to understand the perspectives of shareholders of both the target company as well as the bidding company. Questions on this knowledge area will certainly include a lot of financial data and related information. So it's essential that when you do the question practice, make full use of the time that you have at your disposal to effectively read the scenario given, collate the information in an appropriate way, a logical sequence, so that you will be able to use that financial data in meeting the requirements. The requirements, of course, will test the students on the application of the approaches to valuation and not the theory behind it. So let us see what the expected outcomes or expected requirements from the examiner are. You may be required to compute combined equity value post-acquisition, for which, of course, information will be provided. Additional value that is created on acquisition as a result of acquisition, the various sources of additional value creation, like, for example, synergy, will be provided to you. The requirement sometimes also asks you to compute the percentage gain for the shareholders of both the parties to amend transaction. And at times, the examiner would want you to comment on whether the acquisition will be beneficial or acceptable, which in turn, of course, will depend upon the results, the financial numbers that will come up as a result of your computations. So all in all, what's crucial to tackle these kind of sums is to understand various valuation parameters that are required by you, the way in which the consideration is likely to be settled, various computations that you need to do in order to support your final financial outcome, and also the kind of requirements that you have. So let me touch upon these four aspects of sums on this section before I embark on the past exam questions. What are the valuation parameters that you need to assemble from the financial data that is given to you? Well, whenever you need to compute the value, if the valuation is based especially on the free cash flow method, you need a discount factor. And depending upon what value are you calculating, you can either make use of the weighted average cost of capital to calculate the total company value, or use the cost of equity if you were to compute combined equity value post-acquisition. Sometimes, especially in a 25 marker, you will be given the cost of capital to be used. In a 50 marker, maybe the examiner would need you to estimate the discount factor, either WACC or cost of equity, for which information like asset beta, equity beta, the CAPM related data, that is risk-free rate of return, risk premium, etc., will be available. The growth rates of cash flows may be given, the dividend data may be given, in case you may have to use dividend growth model. Number of shares, existing share prices, if the companies or one of them are listed, that also will be available to you. The purchase consideration settled in a particular way, whether it's cash offer or a share exchange offer or a hybrid offer, or sometimes maybe earn out, all those details will be available to you. Now, based on this bunch of highly comprehensive financial data, you will be required to do a lot of computations. Many of them rather, are working notes, which will help you to actually communicate to the marker the way in which you are meeting the requirements. So The computations may lead to, first of all, identifying or estimating the pre-acquisition values of a bidding company and target company. Using the data on synergies, you may have to determine the present value of synergies and the present value of free cash flows to firm or free cash flows to equity, or even dividends if the data is available to you. And as I said earlier, if required, you may have to also show the computations related to weighted average cost of capital or cost of equity. Now, while doing this, of course, you need to assess whether there will be a change in the business risk for the bidding company. If yes, then post-acquisition cost of equity will be definitely required to be calculated. Wherein use your financial management prior learning and, of course, the AFM knowledge to follow the process of average post-acquisition asset beta calculation, may be weighted in the given proportion or in the proportion of equity values. Re-gear that asset beta using CAPM, calculate the post-acquisition cost of equity. Remember, all these small calculations will determine the correctness of your final answer. So if you look at all the information given and split it into the way that I have shown in these four columns, you will logically move correctly towards meeting the requirements of the examiner. And of course, the requirement could be calculation of combined equity value, calculation of the value that is created by acquisition, and the gain for bidding company shareholders and target company shareholders. So these are minimum, I would say, minimum details you must be able to capture from the given information. I suggest very strongly, whenever you come across a practice question from the practice platform, make it a habit to put these in your mind and locate this information at the minimum. Other information will, of course, depend upon the kind of industry to which the case scenario relates and the objective of the examining team to ask you to perform a particular task. But at the minimum, this much is really very, very important for you to assimilate from the given information. Let me now take you through two practice questions, one a 50 marker and the other a 25 marker. Just to illustrate to you, how would I process the information that is given so that you will not make a mistake and definitely ensure a pass in this requirement. Let's first tackle a question that is a 25 marker, part of a 25 marker question. What the question is? It is asking you to estimate using the data available. Estimate is the word. So maybe there could be certain number of assumptions that have gone into it when you are given the information. So carefully note that. And that set of assumptions will also help you to comment upon some qualitative aspects later on. What are you supposed to calculate? Equity value of combination of O company and L company. So combined equity value is what you are supposed to calculate. And then you are also supposed to calculate the percentage gain in the value, which could be gained by the acquiring company shareholders from the acquisition to conclude whether it will fulfill the expected shareholder requirement of 15% gain in the value. Now, you need to understand the requirement very clearly. First, you are asked to calculate the combined equity value. But the second part is asking you how much that uh, combined value created by merger or acquisition will help the bidding company shareholders, and what is the percentage gain that they would achieve. And it seems that they have in their mind minimum expectation of 15% gain in the value. So if you find the percentage gain answer as, let's say, 18% or 20%, well, it will exceed their expectations of 15%. If you calculate it as 8%, it will uh, fall short of the expectations. And therefore, your answer should be as accurate as possible, because maybe there is a qualitative uh, narrative question that follows this requirement, wherein you may not lose marks. So, what is the information that I would try and collate from the exhibit to make sure that I get maximum 10 marks that are available? So, whenever you see the exhibit, of course, is given into paragraphs, sometimes in tables, etc. But understand what I told previously. Set the information as per the requirement. So, what do I require? Make sure that you make use of every piece of financial data that is available. If you feel that some part of it is irrelevant, try and understand and comment why have you ignored it. So I prepare a sort of a list of points. For both companies, what I need basically is data. For target company as well as for the bidding company, number of shares, market price per share, recent profit after tax of both companies. You're asked to assume that the target company's current value will have to be calculated using, let's say, PE method, and the PE should be calculated as reduced for being unlisted company. L is unlisted. First year post acquisition cash flows, then growing by certain percentages in the years 2, 3, 4 that I will take together. Additional investment, that is required for the year 1, followed by certain incremental amounts for the next year or years. Growth rates in perpetuity. See, it's always important that you split your cash flow based valuation into two parts. So one, the present value of cash flows for a first certain number of years, where the certainty, relatively higher certainty exists. And the second part is valuation of a perpetuity, where perpetuity growth rate is generally very low compared to the earlier growth rates. And then using combined cost of capital, post acquisition capital, you need to calculate the present value of the free cash flows. So I would collect information regarding the calculation of cost of capital post acquisition, capital structure post acquisition, so that I can calculate, if required, the weighted average cost. And I will also need to understand how am I going to pay for the acquisition. So in this case, I would collect the information about premium payable to the target company shareholders based on their fair value of current fair value of the shares. So the sequence in which I will show the working notes is, first, I'll try and show the existing equity values of both the companies using appropriate method. Here it is the price earning ratio. Second, I will show a working note which helps understand how the combined cash flow, company cash flows are calculated, which is free cash flows for firm, using the growth rates, using the additional investments, and also the perpetuity calculations. So there will be a separate working note for that. I'll also prepare a sheet that shows the present value of these free cash flows for firm using whatever discount rate that is either given to me or I calculate as weighted average cost of capital. Then I will determine the combined cost of combined value of equity by using the debt and equity proportion. If you make use of, many students make a mistake here. If you make use of free cash flows to firm, please use weighted average cost of capital. If you're using free cash flows to equity, please use the cost of equity as a discount factor. If you use free cash flow to firm, which was the case in this example, you would arrive at combined value of the company as a whole, that is equity as well as debt. But you are asked to calculate equity value. So what you should do is from the total company value post acquisition, you need to deduct the value of a debt based on the information given, and then the remainder will represent the equity value. In this example, this question, for example, the combined equity value could be calculated by multiplying the equity proportion in the combined company to the total combined value of the organization. And for determining the gains to the shareholder as a second part, I would prepare working notes showing how I have calculated the gains for the shareholders of O company and a separate calculation for shareholders of L company. And logic of percentage gain in value would definitely be the fact that the extra value that each shareholder would be getting will be divided by the current equity value before the acquisition. And then I will try and see if for the O company, whether it's more than 15% or not. So if I collate the information logically in sync with my working notes, use the working notes to prepare my report, if at all it's required. And then link my narrative discussions in word processor to the working notes that I prepare in spreadsheet. You must use spreadsheet for all these calculations. So this particular way of tackling questions on this topic would help you, by moving in a chronological order, using all the information, ensuring that you use all the information. Summarize that information first, and then try and use it to show each calculation the way I have narrated just now. Now, my strong urge to you is to try out this same question, March-June 2023, 25 marks question, in this particular way, and then practice other questions using similar logic. I'm sure you will not make errors when calculating, but at the same time, try and understand where generally students commit errors. And for that, you don't have to keep thinking. Examiner helps you with their comments. So the common areas where mistakes could be made would be these generally. Wrong calculations of additional investments. So generally it is given additional investments are like so many cents per dollar of the increased revenue or increased cash flow, something like that, which is tested even at the AFM level. So bring that knowledge forward and use it. Not discounting perpetuity. Whatever is there, you just take as it is. Discount it to the appropriate year. Not adjusting total company value to find out combined equity value. In this example, equity was asked. So you take total company value and multiply it by the debt equity proportion. to find out the equity value. A wrong calculation of the current value of the target company. So because it was supposed to be done on PE basis, where the PE of target company was supposed to be 40% lower, assumed to be 40% lower than the bidding company. And therefore, you first needed to calculate the PE ratio for bidding company, less 40%. Therefore, you would get the calculation of L company's PE correctly. So, in a 25-marker question, the data will be relatively less complicated. But unless and until you adopt a methodical way, you will not be able to arrive at correct calculations. Let me take one more example, but this time a 50-marker question. Same March-June sample examination, a 50-marker question asking you to prepare a report. Needless to say, section A would ask report. You are supposed to calculate the post-acquisition weighted average cost of capital. So this is simple calculation, and that's why it's only for 5 marks. Don't spend too much time on this, but be very clear when showing your workings to the examiner. Then, in this, you're not just supposed to calculate the combined value of equity, but additional value to the shareholders of J company. Now, J company is a bidding company here, and F company is a target company here. And then you compare the shareholders' wealth before and after acquisition by calculating percentage change in the equity value, as well as next year's dividend income for both company shareholders. It's a 50-marker. For nearly half of that, these 3 requirements are there. Needless to say, as the requirements are complex, the data given also will be like that. So, I read the requirement very clearly. I know what is to be done. I identify the correct exhibit or exhibits for myself, and then I move forward. What I do? Again, I list down the financial information that is given to me, which I have to make use of for addressing these requirements. So for calculation of weighted average cost of capital, I require the market value of equity for both the companies, the asset betas, recent dividends, share capital, post-acquisition asset beta for the bidding company, which was told by the examiner it should be weighted average of pre-acquisition asset betas for both companies, and you use equity values as weightages. So don't make a mistake there. Post-acquisition cash flow calculations, of course, would be told to be based on the profit before interest and tax, and you need to apply growth rates. Similarly, additional investments information is given. In this example, there was post-tax synergy savings given, growth rate for perpetuity given, share exchange ratio. Now, this was not a cash offer. This was a share per share offer. So exchange ratio is given. Acquisition premium to be built into the analysis that was told to you. And then the third requirement was on the dividend income post-acquisition. So there is a restriction on dividend which is arising out of a debt covenant. And for both the companies, tax rates, risk-free rate, and risk premium related data is given to us. So when you refer to exhibits, summarize the data like this, because the exhibit will not be in a summary form, it's in paragraphs, and you need to make out summaries from this, and sort of the summary, you should keep it handy with you in your answers, so that you prepare from each one, you could prepare related working notes. Now, what do I do for computation simple, I mean, of the weighted average cost of capital, I'll take steps like computing combined asset beta. Then I'll use this combined asset beta. I will calculate combined equity beta using the asset beta formula. And I will not forget the tax rate. Combined cost of equity, I'll use the combined equity beta into CAPM formula using RF and premium, etc. I'll calculate the combined cost of debt based on the given formula. Here it was, you take a risk-free rate as a base and then a premium on that. And then using the proportion of debt and equity, I will simply calculate WACC. Subsequent to that, I will also make the calculations which help me determine the additional value estimates, for which first working note will show the present value of profit before interest and tax, less additional investments over a period of 4 years. To that, I will add a present value of perpetuity, present value of synergy. Now, adding these three together will give me a total combined value of the firm as a whole. And then I will determine the combined equity value as a total value times the proportion of equity. And then I will not stop here. Many students leave it at that. No, we are asked to determine additional value for the shareholders of J company, which will not be nothing but combined equity value less the pre-acquisition equity value that was given to you. Now, this will be the additional value created for the shareholders of the bidding company. And then there were two calculations that you were supposed to show on, a comparison of shareholders' wealth with before and after acquisition. That's simpler because you were given the pre-acquisition equity values of both. You have understood how to determine the calculation of percentage gain for both, like share in the combined combined value of equity divided by pre-acquisition value of equity. That will give you percentage change. And dividend also, dividend that is entitled by both company shareholders pre-acquisition and post-acquisition. So whether it's a 25 marker or a 50 marker, methodology, logic remains absolutely same. Here as well, you will find that the examiners have identified basic areas of mistakes that the student make. Computation of asset beta, determining post-tax cash flows, especially perpetuity and synergy. Failure to adjust the total combined value for debt to arrive at combined value of equity. Many of the students in this particular examination didn't even attempt the last part, percentage gain in shareholders' wealth. So if you use, again, I have illustrated to you with two strong examples how to move methodically in a synchronized way to be able to do exactly what you are asked to do, still be confident, make a list of all that is given to you, working notes, and then the answer will flow out of that. So in summary, what have we understood from this video is, first of all, identify what valuation approach or approaches would you be using. For example, in both the examples, there were at least two approaches that were used. One was PE based, the other was free cash flow based, and the third was using PBIT as a base and then move forward, synergy also. Logical steps are required to show your calculation clearly in the spreadsheet. And when you are preparing spreadsheet, please make sure that you use all the functionality to the extent possible. To do this confidently, of course, you need to do a lot of question practice. And that's the only way you will be better prepared to face your exam requirements. Don't forget to link your spreadsheet calculations to the narrative answer that you are writing in the word processor. I will always encourage you. Don't forget to make full use of the ACCA resources. Learn from the study hub. Practice quizzes and other practice questions from the study hub as well as from the practice platform. And without fail, go through all relevant technical articles. So I'm sure after using this video, if you try to do the practice questions on your own, you will see certain improvement in your confidence level. Thank you very much for watching this video and all the best for your preparations. Thanks a lot.